Welcome to the B.F. Anderson Technical Report for January 27th. As we can see, and we all know that the Nasdaq has taken the biggest hit here. The technology stocks have been plummeted pretty well. This is somewhat of a bear market in technology stocks. You can see here Nasdaq below the 200-day, came down, made a really deep low, trying to stabilize. We'll see. But as we can also see here on the 35-week moving average, we've gotten the break. We haven't seen this in a long time. The rule is 2 weeks, and we're in the second week, so we'll just have to see. If the market doesn't rally this week, we could get a sell signal on this indicator. Mid-cap, same thing. We've got the rollover, broken below the 200-day. Continue to stay cautious. New York Stock Exchange below the 200-day. All the stocks on the New York Stock Exchange acting poorly. Small caps really took the lead to the downside, somewhat getting a bounce, but continues to be weak. On the S&P 500, it's holding up the best, actually holding right around that 200-day, but we'll continue to say it is in a downtrend. Now, also on that 35-week, we're in the second week of being below the 35-week. We'll just have to see on that as well. Now, on the yield curve, we continue to see upward momentum in the yield curve where the long bond is outperforming the short bonds, which does indicate inflationary pressures. Here we have the aggression index. Now we're going to talk a little bit more about the aggression index. I really have to take my hat off to this particular indicator. It gave us a sell signal really very early in December when it broke below that 40-week moving average. But as you can see here, quite a nasty decline. We're actually getting a break, or what we call a death cross, of the 10-week breaking below the 40-week. On our economic indicators, interest rates have somewhat relaxed. Oil prices continue to stay in an uptrend, looking to break above 85.90. Financial stocks came down along with the relaxation of interest rates, but somewhat coming back a little bit today. New lows too high. We're getting way too many new lows, which is somewhat of a negative signal. However, the positive here is that everybody's fearful. So with the AAII bull bear fear greed index, we're in fear, so somewhat of a buy signal there. Probably ought to be looking at doing some nibbling. However, keep it very light. Now on the put call ratio, I went ahead and made a change here to maybe reflect a little bit more of what's going on. The institutions do appear to be buying more puts than calls as we've broken above the blue line. So we are somewhat entering fear on the put-call ratio, which is actually a buy signal. Now on junk bonds, continuing to see an uptrend there. However, we've had a pullback along with the equity scare that we're dealing with. Continue to monitor. On the percent of stocks below their 200-day moving average on the Nasdaq, we said 25 was an important area. We sliced right through it. However, you can see that you'll get oversold here, which pretty much sets up a bottom. However, we're continuing to drop, so we'll just have to continue to monitor, but no upturn at this time. Volatility Index. Now, the rule here, remember, is we get to an extreme level when we do a rate of change over 10 days. So over the last 10 days, the Volatility Index has gone up 62.85%. Anything over 50% move in 10 days is extreme. So we're getting somewhat extreme here. Could be, again, starting to indicate some type of a bottom. Now, I wanted to go back and look at the aggression index. I went back to 2007, 8, and 9 just to not only look at the sell signal, but also look at the potential buy signal that may be coming down the road. So as you can see here, we broke below like we are now. Now, here's where we are now. We have broken below both moving averages. Moving averages crossed. We've gotten the death cross. So let's go back and look here. This is where we broke below the 40-week moving average. We got the death cross, stayed in a very severe downtrend during the financial crisis, finally bottomed, started to stabilize, got back above that 10-week. However, as you can see here with the market itself, the market continued to stay in a downtrend along with the aggression index. In other words, the index is designed to say, should you be aggressive here right now? And the answer is no, you should not be. So wait for some type of indication or upturn in the aggression index, especially if we break back above that 40-week moving average, because you can see clearly here that the market put in a bottom in 09 when that indicator gave that signal. So just reflecting back on it one more time, we're in a downtrend. We are getting somewhat of an uptick today with Microsoft's earnings. However, continues to stay in a downtrend, therefore continue to stay cautious. Now, I wanted to show a couple ideas of things that we should probably be avoiding. Here's Amazon breaking down severely. All the moving averages are turning south. Stock needs to stabilize and so forth. Then we also are looking at this ARK fund, which was a very popular growth fund last couple of years, actually in a very severe downtrend, continues to look very weak. Now, as we get into the top 5, we're going to see names that are mainly energy and inflation related names. So here's Devon Energy. Continues to be on the list. Now, I don't really like this V-bottom formation. These tend to fail, so we're just monitoring this stock at this time. As you can also see with Diamondback Energy, FANG, it's also got that same V-bottom type of formation. However, as we get into the drillers, in other words, the way I understand it, these drillers are going to start making money again at $65 oil. Well, we're currently at 85. So the Halliburtons, which are the service companies, we got a gap up in this with very heavy volume, continues to hold the gap, pretty positive. Here's Marathon Oil also breaking out to the upside. Now, this is a refiner as well. It's an integrated company. However, you've still got that same V formation. Now, if you look at this one here, this is Zim Integrated Shipping. This is shipping ships. You can see the same kind of V formation, kind of failing to break back above that 10-day. Kind of looks like a failed breakout in a way. So be cautious. Continue to move very slowly here. Let me know if you have any questions. Thank you very much.